Hello friends, welcome to learning sessions, and today in this video we are going to discuss the chapter from module A of PPB that is related to the foreign exchange remittance facilities for the individuals over there. So we have already covered a lot of chapters related to PPB before, and this is the time that we are covering the updated syllabus for JAIIB 2023. So do watch this video till end because this video is going to be very much helpful for you. And further, if you want to get the full courses of JAIIB, do enroll into our courses visiting the website iibf.info, or you can download our Android application which is available in the name of IIBF Learning Center. And if you're an iOS user, do download My Institute application and use the organization code GEGKT. And if you're having any of the issues and the concerns related to the courses or anything related you wanted to ask, then you can do contact us or WhatsApp us at the number 83609 44207. We'll be getting back to you with the resolution of the same. So let's start the session over here. It's related to the foreign exchange remittance facilities for individuals. So we are aware that in India, FEMA is there, that is the Foreign Exchange Management Act is there, and actually it replaced the previous act FERA, that is the Foreign Exchange Regulation Act over there. And the FEMA is actually consistent with the WTO framework regime over there, which was over the foreign exchange global basis over there. So why we actually need the management over there? Because the foreign exchange market is very much competitive, it is quite large and quite dynamic over there, and it is the most liquid market in the world over there, and there are constant changes and innovations in the foreign exchange market. And so as to mitigate the risk over there, so as to avoid the risks over there, it was required that the foreign exchange must be managed, and we must also be having the sufficient resources of the foreign exchange with us, so as to maintain the rupee value globally over there. So that was why it was quite important. And then it's related to learning the main features of FEMA, that why it must be there. So first of all, it is related to that if the central government want to impose some of the restrictions, it actually empowers the central government to do so, and all the foreign exchange transactions whichever are there in India must be through the authorized person only, and the licensing for the same is given by the Reserve Bank of India, because under the FEMA, Reserve Bank of India has been empowered to basically issue the licenses for the foreign exchange over there. So we'll be learning them all in detail over there. So whether it's related to that you're receiving the payment, whether it's related to the payment of the foreign exchange inside India or outside India, there must be authorized person through which you'll be dealing with it, and that is actually quite restricted over there. And foreign exchange transactions like foreign security dealings or owning or holding the immovable property abroad over there is also restricted through the FEMA only. So transactions which are involving the foreign exchange and foreign exchange security and the payments from outside to India over there cannot be undertaken without or general or specific permission from the Reserve Bank of India. I already told you that RBI under the FEMA is actually empowered to restrict any person so as to receive India or to make payment of India. So it's quite required to get the permission from the Reserve Bank of India. And foreign exchange transactions under the current account transaction are quite we can say the laxity is already there is no restriction as such, but the restriction has been imposed after some particular amount over there. And we will be learning related to the liberalized remittance scheme also, under which the individuals have been given the facility that they can remit amount up to some extent over there without taking any prior permission from the Reserve Bank of India. So RBI is actually empowered under the FEMA to basically restrict the capital account transactions in number of the account transactions over there. So what is current account transaction, what is capital account transaction, we'll be learning in detail. Okay, then it's related to that people who are actually living in India, they are permitted to carry out the transaction in foreign exchange. As I already told you that the LRS is there. So if they want to basically make payment for their medical purposes, for if they are moving to abroad over there, if they are going to gift someone or donate someone, so there are liberalizations related to the same. And also there have been restrictions imposed on the citizens of India related to that why they cannot actually be investing into some of the securities or properties abroad there. So that is all covered under FEMA itself. Now let's cover some of the important definitions related to it. First of all, it's related to authorized person. That who is the authorized person? It means a bank or person which is actually authorized by the Reserve Bank of India. It may be the case they have been authorized as a money changer or dealer over there, which have been authorized under the FEMA so as to deal with the foreign exchange securities over there, and that authority is given by the Reserve Bank of India. And when we talk about the currency, it is not only covering the currency notes and coins over there, but it is also covering the postal orders, money orders, checks, traveler checks, etc., each and everything which is actually related to currency exchange, we can say. So it's not only covering the banknotes over there, but also covering the all other aspects also. And also the credit cards and other similar instruments are also mentioned as a currency in the FEMA over there. So currency is not only related to the banknotes and also covering the other aspects. Okay, and that has been notified by the Reserve Bank of India. And when we talk about the foreign currency, it means what? It means any currency other than the Indian currency, that is a foreign currency to us. And when we talk about the foreign exchange, so it's actually related to not only the foreign currency. In addition to the foreign currency, it also includes the amount actually which is payable in the foreign currency over there. It could be by the way of draft, postal, we can say postal orders, or a travel check over there, letter of credit, or a bill of exchange over there, which are expressed or drawn in Indian currency, but those are payable in foreign currency. Or it could be the case that draft, travel check, letter of credit, bill of exchange, etc., etc., which are actually drawn by the persons outside India and payable in Indian currency over there. That also means a foreign exchange over there. So whether you are in India and you have drawn some instrument and that is payable in foreign currency, or whether you are outside India and you have drawn an instrument that is payable in Indian currency, those all are covered as foreign exchange over there. And when we talk about the person in FEMA over there, it is covering an individual, company, a firm, HUF, and association of persons. So every legal person, every natural person is covered over there as in the definition of the person over there. Now let's understand the person resident in India. Now person residing in India for more than 182 days in the preceding financial year, like if we're talking about 2023 over there, then the person who has been residing in India in the financial year from March 1st, from March, not March 1st, it's actually the April 1st, from April 1st 2022 to March 31st 2023. So if I have been residing in India for more than 182 days, in the previous financial year, then the person is said to be the resident of India. Okay, a person who has gone outside India, who stays outside India for taking up the employment outside India, for carrying out the business, for any other purposes over there, that will actually indicate that the person is going to be staying abroad for a longer duration, for an uncertain period over there. That person is said to be the non-resident Indian, and this definition is as per the IT Act 1961. So Income Tax Act 1961 has given this definition from the taxation point of view. Okay, and also person who has come to India and stay in India otherwise than that, who is not actually residing in India for these particular reasons, then this person will also be the resident of India if he or she has been staying in India for more than 182 days in the previous financial year. Like if the person has not come for the employment in India, if the person has not come so as to carry out a business in India, for any other person which is actually indicating that the person is going to stay in India for a longer duration over there or uncertain period over there, then that person will not be covered over there, because this is the clause related to where it says a person who has come to India or stay in India otherwise than. Okay, so it means these things will be accepted out of the clause so as to person to be counted as for the resident of India. Okay, then it's related to the repatriation to India. Repatriation means bringing it back to India over there. So like if you basically have invested abroad over there and it is to be repatriated, it means bringing the foreign currency back to India over there. Why it is so much required? Because we want to increase the foreign exchange reserves with us so that we can maintain the external or global value of the rupee over there. Now let's understand the regulation and management of forex. That's quite important. Now the regulation is actually there related to when you're dealing or transferring the foreign exchange or foreign security to any other person, then the authorized person regulation is there. And when you want to make the payment to any person outside India, the regulation is there. When you want to receive the money or the foreign exchange or foreign currency from any other person, then the authorized person over there, that is also actually regulated. And further, if you are going to enter into any financial transaction in India in relation to right or to acquire any of the asset outside India by any person over there that is also to be regulated under the FEMA over here. Okay, then after that it's related to the power of Reserve Bank of India with respect to authorized person over there. Now I already told you that RBI is the RBI is empowered so as to actually appoint the authorized person over there. Now authorized person deal in what they deal in the foreign exchange over there. We can say like those are the agents of the Reserve Bank of India. Those on behalf of the Reserve Bank of India are actually mandated to go through all those regulations and further perform all the functions as per the Reserve Bank of India guidelines over there. And the persons who appointed work under the direction of the Reserve Bank of India, they need to comply with the rules and regulations. Those are formulated and further circulated by the Reserve Bank of India from time to time for this particular purpose over there. Now there is because RBI has actually appointed this person, RBI is having the right so as to basically regulate these persons, so as to inspect these authorized persons over there, and they need to comply with the rules and regulations which are circulated by the Reserve Bank of India. And if those are not complying with the same, in that particular case there is a penalty of rupees 10,000 which will be actually be imposed after giving a chance to be heard of. And if the contravention actually continued, that if they were making any issue or if they were actually basically making any error over there, and further the penalty was imposed after hearing them off, and further still they are doing the same, in that particular case there will be an extra penalty, rupees 2,000 fine per day will be imposed upon them. Okay, and then it's related to contravention penalties and adjudication and appeals over there. So under the FEMA, if there is violation related to the provisions of this particular act over there, in that particular case there is the provision related to the right to arrest or detention over there. The penalty will be imposed, but against that, if the penalty is not recovered from the person, in that particular case there can be a right to arrest and further detention over there. Now let's understand, first of all, it's related to the right of appeal. Now first of such appeals shall be with the special director of appeals over there. Thereafter, if someone is agreed by the said appellate authority over there, in that particular case they can do prefer to appeal against that particular order before the appellate tribunals which are actually established for this particular purpose. So this is the case, like A is the authorized person and he was actually be making an error over there, and RBI imposed a penalty. He can do actually report it to, or he can make an appeal to the special director over there, and further the special director passed an order, and further he was agreed with the order. They can surpass that particular order, and further they can do can appeal to the special authorities, or we can say appellate tribunals over there, which are established for this particular purpose, and their decision will be full and final. Okay, so that's actually related to it. And the penalty can be levied up to thrice of the sum involved in such contravention if the amount is not quantifiable. Like if I'm not known to that what amount is involved in this particular transaction, in that particular case whatever the amount will be involved, it could be related to thrice of the amount penalty can be imposed over there. And further, if the amount is quantifiable, I'm correcting it over here. If the amount is quantifiable, in that particular case the penalty can be imposed up to 3 times of the amount so involved. And if the amount involved is not quantifiable, in that particular case the penalty would be up to rupees 2 lakh. Okay, and further, if the contravention is continuing one, in that particular case the penalty can be extended up to rupees 5,000 per day after the first day during which the contravention continues. And further, if the penalty is not paid within 90 days, then civil imprisonment can be imposed over there. This is a quite important point to be taken care of. Okay, and then further it's related to the DE, that is the Directorate of Enforcement over there. Now central government, because it's related to FEMA, actually empowers the central government for the regulation purposes, and under the FEMA RBI has been empowered. So the central government is having the authority that they can establish Directorate of Enforcement with the director and the officers, which are called the officers of enforcement over there. And the director of enforcement and the other officers of enforcement are not below the rank of the assistant director, can actually investigate the contraventions over there. Central government can also authorize any of its officers over there, it could be from the state government, it could be from the central government, it could be from the Reserve Bank of India, or any of the further authorities over there, which can actually investigate the contraventions. It's in the rights of the central government that they can appoint any of the officers officers for the investigation of the contraventions over there. Then further, it's related to some of the important definitions. Then it is the first definition, it's related to the authorized dealer over here. Now a person actually who is authorized as an authorized dealer under the subsection 1 of section 10 of FEMA over there is said to be the authorized dealer. Like an authorized person, authorized dealer is a person who will be actually be dealing with the foreign exchange over there. Authorized dealer is having categories, like we are having the category 1, category 2 and category 3 over here. Now category 1 authorized dealers are the entities which are authorized by the Reserve Bank of India to so as to carry out all the permissible current and capital account transactions as per the directions which have been issued by the Reserve Bank of India. And when we talk about the authorized dealer category 2, this is actually related to those entities which have been authorized by the Reserve Bank of India so as to carry out the specific non-trade related current account activities or transactions over there, and all the activities permitted to the full-fledged money exchangers are covered under this particular category. Okay, so when we do visit any of the person or any of the agent over there, so as for money exchange, so as to buy the travel checks, it's actually falling under the category 2 or category 3 over there. But category 2 is having a broader area because they can also deal with the non-trade current account transactions over there. Now current account transactions mean the transactions actually which we are doing on daily basis for our day-to-day businesses, for maintaining our culture over there. So that's actually related to the current account transactions. It's not actually related to because the capital account, there are two types of transactions. One, it is a current account transactions, and the other one, it is related to the capital account transaction. Okay, now the current account transaction is related to day-to-day transactions, like we want to pay some amount abroad for family maintenance purposes. It could be related to the medical treatment or any other thing over there. So those all are covered under the current account transactions. When we talk about the capital account transaction, these are such type of transactions which will alter the position of assets and liabilities of the person staying abroad. And also it covers like if a person is residing over here in India and he's going to buy a property over there abroad over there, then it's a capital account transaction and not a current account transaction. Similarly, if NRI wants to buy some property here in India, that is also a capital account transaction, not a current account transaction. And under the authorized dealer category 3, those all entities which are authorized by the Reserve Bank of India so as to carry out the specific foreign exchange transactions incident to their businesses or activities over there, those are covered under authorized dealer category 3 over there. Okay, and then it's related to definition of AP, that is authorized person, which we have already covered. So AP is authorized dealer, money changer, offshore banking unit, or any other person which is actually authorized under subsection 1 of section 10 of the FEMA over there so as to deal in the foreign exchange or foreign exchange securities over there. That is a authorized person over there. Okay, now like I told you, related to capital account transaction, what those are, those transactions which are going to alter the asset and liabilities, including the contingent liability outside India of person resident in India, or the asset and liabilities of a person resident outside India over there. So those both are covered. Like you're residing over here in India and you want to buy property outside abroad over there, that's a capital account transaction. Similarly, if an NRI over here abroad wants to buy a property here in India, that's also a capital account transaction. Okay, like the definition of currency I have already conveyed to you. It's not only covering the currency notes but also covering the postal notes, postal orders, money orders, bill of exchange, letter of credit which have been drawn in a foreign currency over there. Those are also covered under the currency over there, and those are notified from time to time by the Reserve Bank of India. And it also includes the international credit cards or debit cards and the ATM cards over here. Okay, now it's related to currency notes. Currency notes, actually it's the cash form only, like coins and banknotes over there. Current account transaction is actually the other transactions, and the capital account transactions are the current account transactions, like you're going to pay some amount abroad over there for your business purposes, or your current account transaction, you're going to pay any of the amount for day-to-day family maintenance purposes, that's also a current account transaction. Okay, so those all have been covered over there. Like if you're traveling abroad and you want to make some expenses over there, so that is also a current account transaction over there. Okay, then it's related to deposit. Now deposit actually includes deposit of money with the bank. Okay, with a bank or with a company, with a proprietary concern, with a partnership firm, with a corporate body, trust, or any LLP, or any other person over there, that is actually deposit over there. Then it is a case of the FFMC, like I've already told you, the authorized category part 2 over there, that is related to authorized dealer category 2 over there. Those are actually are the FFMC persons over there. So it's a money changer who is actually authorized to purchase a foreign exchange from the non-residents visiting in India and the residents over there, and to sell the foreign exchange for private and business travel purposes only. That's a full-fledged money changer over there. Then it's related to investment on repatriation basis. Now what do you mean by investment on repatriation basis? Investment means, like an NRI person over here is here, and further he want to make some investment in India, and he says that after investment I'll be taking back this money back to my home country over there. So that's actually related to what? That's actually related to investment on repatriation basis. And further, it is a net of the taxes amount which can be repatriated. Net of taxes means that let's say that he invested 1 million USD over here, and further he basically earned some money. Let's say he earned $200,000 over here, and in that particular case the tax is to be imposed on this particular amount, and net of taxes whatsoever the amount will be there, that can only be repatriated over there. That is to be kept in mind. Okay, then it's related to the liberalized remittance scheme. So it is a facility that is available to the resident individuals so as they can make remittances outside India as per the conditions which have been mentioned by the Reserve Bank of India as per the master direction on LRS, that is a liberalized remittance scheme over there. Then it's related to remittance of assets outside India. Like if you're maintaining some of the assets over here in India, like let's say that you're having your shares, debentures, securities, immovable property, or superannuation funds over there, provident fund balances over there, those are actually your assets. And further, when you want to remit those assets abroad over there, that's actually related to the remittance of assets over there, and that is to be in accordance with the FEMA, that is Foreign Exchange Management Act. We will be learning them all, that how these assets can be remitted and what are the limits related to it, what are the restrictions over there. We will be learning in detail. Okay, then it's related to bringing in and taking out the foreign exchange. Now when we talk about bringing in the foreign exchange, there is no actually limit related to that, but certain procedures and the provisions are there which are to be taken care of. First of all, it's related to CDF. Okay, now when foreign exchange is brought into India by a person, a declaration to the customs authorities is to be given in the form of a CDF, that is a currency declaration form over there, and it is to be made except in the cases if the currency notes and traveler check do not exceed the USD 10,000 or its equivalent. I'm talking about the currency notes and the traveler check over there. If the combination of the both is there, in that particular case, if the amount is not exceeding 10,000 USD, in that particular case the CDF form is not to be basically given to the custom authorities over there. And also if the foreign currency notes do not exceed USD 5,000 or its equivalent, in that case also CDF form is not to be submitted over there. Okay, so that's the case. Then it's related to purchase of foreign currency from public over here. Now, whatsoever the authorized person or their franchisees are there, they're actually free to purchase the foreign currency notes, coins, traveler checks from the residents and the non-residents over there. And the payment in cash in Indian rupee for foreign currency notes or traveler checks is permitted, but following ceilings are there. First of all, from resident person, we can receive USD 1,000 or equivalent only, and from foreign visitors, we can receive USD 3,000 or equivalent only, and the payment related to in Indian rupee can be made up to that particular extent only. And for the sale of Indian rupee to foreign tourists and visitors against the international credit cards, international debit card is actually also permitted over there. Payment to resident customers for foreign currency notes or travel check purchase can be made to the Indian rupee by way of account pay check, demand draft, loan or loading in INR debit cards, electronic funds transfer through the banking channel only. Like I said that up to the amount of USD 1,000, if you're Indian resident, and up to 1,000 USD you can take Indian rupee cash. Okay, but beyond that whatsoever the amount will be paid, that is to be actually through the banking channel only. Okay, so that is the case in case of the resident Indians. And for if the person is NRI, in that particular case the amount USD 3,000 equivalent can be paid in cash, but not more than that. Okay, so that's the case related to it. And then it's related to sales against the reconversion of Indian currency. Like it could be the case that a person has visited India, they converted the amount into Indian rupee over there, but they have not spent or utilized the INR over there. Now when they are departing from India, in that particular case the authorized persons can actually convert it back into the foreign currency over there. The unspent Indian currency held by the non-residents can be actually converted back into the foreign currency over there, but provided they are having a valid encashment certificate over there. Okay, then it's related to the inward remittances. Now what is inward remittances? Now let's say person A is an NRI, person A is an NRI person over there, and further he wants to invest some money in India or want to send some money to his family members over here in India. In that particular case, he will be actually be sending money. He will be remitting money inwardly because the money is coming into India. So we are saying it to be inward remittance over there. So it refers to the transfer of money funds to a country from a foreign country. Okay, the transaction is initiated from a foreign country itself by a person making the remittance to a person in the recipient country over here. So that's actually the inward remittance over there. Now let's learn the general rules on inward remittances over there. So there is no restriction related to the amount which can be received by a resident individual for receiving the inward remittances through the authorized dealer banks in India. But as I told you earlier, whatsoever the amount is to be received, that is to be done through the authorized dealers only. None other can can actually be receiving the amount directly from a person outside India. Okay, now what are the approved remittance methods are there in India? So the approved methods actually involve the bank wire transfer, that the money is transferred from one bank to another using the electronic medium, and it takes T+2 days and minimally. And for the bank money orders, the bank allows the remitter to buy the money order outside India and send money to the beneficiaries in India over there. That's actually related to money order. Like local money orders are there, it's related to foreign money order will be there. Okay, then it's related to foreign currency checks. Now foreign currency check actually method is a quite simple one, where the foreign remitter writes a check and will be sending it to the recipient over there. The recipient will be depositing the check or will be presenting the check in the account with the bank in India over there, and the amount will be credited. But this process is quite simple, but it is time consuming over there. Then it's related to foreign currency draft over there. Now foreign currency draft is actually related to ordinary bank draft over there, that the person will be buying a bank draft. Let's say that person A is another person, he wants to basically send some money over here, then he can buy a money draft over here, he can buy a bank draft over here in the foreign country from the bank, and further will be giving the same bank draft to the person over here in India. That's the same, and kind of that similar to the check over there, because and also it's also time consuming. Then it's related to remittance cards over there. Remittance card is actually related to a green card now. So actually in that particular case, the money will be loaded to it will be loaded and it can be reloaded, and it will be given to some person over a resident over here in India, or another person can buy this card and further in the recipient name and register and send the remittance card over there. And once the remittance this particular remittance card has been received, this card actually can be used at ATM stores, and this card can be actually easily purchased, and it is quite cost effective also. Then it's related to direct deposit. In this method, NRI authorizes a bank to withdraw the funds from his foreign bank account as per his instructions over there. Okay, now in that particular case, what happens, let's say that there is a bank over here in India, XYZ bank over here in India over here, and and person A over here who is NRI authorize the XYZ bank so as to withdraw the funds from his foreign bank over here. Okay, so there will be a mandate which will be given to the foreign bank that will be allowing the XYZ bank over here so as to debit the amount as instructed by the person A over here. So that's actually related to the direct deposit over here. This method is quite recommended when NRI has to send money on a home regular basis over there. Okay, and then it's related to the inward remittance limit. As I earlier told you, there is no specific limit related to bringing back the foreign currency in India over there. Foreign inward remittance certificate is not required for the remittances to India by the non-resident Indians to their relatives over there. So there is no limit related to that. Then it's related to the outward remittance. Now what do you mean by outward remittance? Outward remittance is related to that your money is over here in India and you want to send back it to your home country over there. That's actually related to the outward remittance, and the release of foreign exchange to person in India for various current account transactions is governed under the Foreign Exchange Management Rules 2000 over here. And these rules have categorized the current account transactions in the following three transactions. First of all, it's related to transactions expressly prohibited. So those transactions which are actually prohibited, you cannot actually transfer your money in that particular case. And the second category it is related to, which is covered under the Schedule 2, that's related to transactions permitted with prior approval from the concerned ministry or department of the government of India. So for that particular purpose, you are to take a prior approval for the same. And third, it's related to the transactions that can be permitted by the authorized dealers up to the threshold ceiling specified limits over there. And for that particular purpose, the permission from the Reserve Bank of India or any of the ministry or the department of the government of India is not to be taken priorly up to that particular ceiling limit over there. That's covered under the Schedule 3. Okay, we are going to cover first of all transactions which are prohibited. transactions which are prohibited, like there is a remittance you want to make, that you have earned a lottery amount over there and you want to basically remit that amount over there, so that is not permitted over there. A remittance of income from racing, riding, etc., or any other hobby over there. A remittance related to so as to purchase the lottery ticket, that you are saying that you want to purchase the lottery ticket abroad there, that's not allowed. And further, it could be the case the banned or proscribed magazines are there, football pools are there, or sweepstakes are there. Actually, that is not allowed at all. You cannot make the remittance for the same. And further, what's the commission or exports made toward the equity investment in joint ventures or wholly owned subsidiaries abroad over there, and you have earned the amount and you want to pay the commission for the same, okay, that is actually not allowed. So these are the prohibited transactions. And further, remittance of dividend by any company to which the requirement of dividend balancing first applicable, like the company over here in India, and further they want to remit the dividend outside India. First, the dividend particularly balancing is to be done over here. Then only the dividend can be actually be remitted outside India. Okay, so if the dividend balancing has not been done in that particular case, that is also prohibited and cannot be allowed. Okay, then related to transactions that can be permitted by authorized dealers, that is under the Schedule 3. We're not going to cover the Schedule 2 for that particular purpose. You can take a note of that because that is not going to be that much important, but these can be asked in the exam itself. So that we are covering these two only, that is the Schedule 1 and Schedule 3 over here. Okay. Now, Indians can avail the foreign exchange facility during a financial year for the purposes, and the limit is 250,000 USD per financial year over here under the LRS scheme, that is a liberalized remittance scheme over there. Okay, and for that particular purpose, if the amount you want to remit is under the ceiling limits, that for that particular purpose, the prior approval from the Reserve Bank of India is not to be taken by the authorized dealer over here. Like you want to going abroad for your private visit to any country except the Nepal or Bhutan, you can actually remit the amount. And further, if you want to gift or donate, if you're going abroad for employment purposes, immigration purposes, if you're going to pay the maintenance cost to your close relatives over there, if you're going for travel for business purposes or attending a conference or a specialized training is there, or for medical expenses purposes, you can actually remit the amount under this particular limit of 250,000 USDs per financial year over here. And also, if the expenses in connection with the medical treatment abroad, if you're going to study abroad, if you're any other current account transaction is there, that is actually allowed up to this specified limit over here. Okay, for the under specified mentioned purposes, individual can avail the exchange facility for any amount excess in LRS scheme. Now, LRS scheme says that you can remit amount up to 250,000 USDs per financial year. We have already learned about for what different purposes you can remit this amount, but in excess, if you want to remit the amount, that is also permissible for certain purposes. Let's understand that. First of all, it's related to immigration. Now, if it is required by the country of immigration, in that particular purpose, it is also allowed that you can send excess amount. Like, let's say that the immigration country said that you have to pay or maintain 350,000 USD over there. That is actually allowed if the immigration country is asking for the same. And further, it's related to expenses in connection with the medical treatment abroad. So you are to actually require, it is actually a quotation that will be sent by the medical institute that is offering the treatment over there, that the excess of the expenses will be there, that will be exceeding 250,000 USD over there. In that particular case, also you can actually remit amount exceeding 250,000 USDs over there. And also, when you're going to study abroad, and if it is required by the university that you are to pay amount exceeding 250,000 USDs, which is actually permitted under the LRS, you can actually remit extra amount over there. Then it's related to the ICC, that is the international credit card. Okay, I earlier told you that the ICC, that is the international credit card or international debit card, those also are the part of the currency in definitions of the FEMA over there. So the restrictions contained in FEMA are not applicable to the ICC, that is the international credit card that is issued by the overseas banks over there and the reputed agencies over there. That is actually used by the residents for the expenses while on a visit outside India. I just told you that it's related to that you are going to visit abroad, and as per the LRS, you can actually remit amount to like 50,000 USDs only. Okay, but if foreign country bank over there or an agency, reputed agency over here has issued ICC, and you're going to spend more over here using this ICC, in that particular case, that particular part is not covered under the FEMA over there. There is no restriction related to that. That's a quite important point so as to understand. So resident can actually use this ICC on internet for any other purpose or for which the exchange can be purchased from an authorized dealer in India over there. Like it could be related to import of books, for purchase of downloadable softwares, or any other items that is permissible under the foreign trade policy over there. That is actually allowed, that you can make use of that ICC for the import purposes. Okay, ICCs cannot be used in manner for prohibited items. Like I told you that there are some items under the Schedule 1 which are for which the foreign exchange remittance is prohibited. For that particular purpose, the ICC cannot be utilized. You cannot use it for purchasing the lottery ticket. You cannot be actually be using it for banned or prohibited magazines, and for the participation in the sweepstakes, etc. That is not allowed for using the ICC also. Otherwise than that, you can use the ICC for the purposes which are actually permitted. For import purposes, you are to look into the foreign trade policy, that for which items there is no prohibition on the import. You can make use of ICC over there. Okay, there is no aggregate monetary ceiling separately prescribed for the ICC for this particular purpose. If you are going to purchase through the internet, then no limit is there imposed, and resident individuals maintaining the foreign currency accounts as permissible with the authorized dealer in India abroad are free to obtain the ICCs issued by the overseas banks and the other reputed agencies that is actually related to it. I hope that you must have understood. Then it's a case of the IDC, that is an international debit card. Now authorized dealers may issue IDC to a resident for drawing the cash or making the payment to a merchant establishments overseas during their visit abroad over there. Like IDC is what? It is a debit card. Now IDC, it is a debit card and it will be issued by an authorized dealer over here. Person over here visited abroad, he can actually make use of IDC for that particular purpose, but IDC can be used only for the permissible current account transactions and within the limit which is actually prescribed under the schedules over there. Like I told you that there is a limit under the LRS, that is 250,000 USD. That is actually covering, the IDC is covered under this limit only. ICC is not covered under that particular limit, but IDC is covering under that particular limit only. So IDCs cannot be used on the internet for purchase of the prohibited item. That is also same one as per the ICC was there, because for the prohibited item it is prohibited, whether it is a cash, whether it is a IDC, whether it is a ICC, that is not permitted at all. Okay, then it's related to use of credit or debit cards for payment for airline tickets over there. Now, many of the card companies have been providing the arrangements in the foreign airline operating in India to select the country and the currency of their choice for the credit and debit card transactions. Like you must have visited some website over there which is allowing you that you can make payment in USD, you can make payment in JPY, you can make payment in GBP. Okay, so that's upon you that in which payment you want to make the payment over there. Okay, so you will be going to select the currency over there and you can make the payment using the IDC or ICC over there of your choice, and the arrangement is quite simple related to that. There's nothing new in that, but just a point to be noted that can also be done. Okay, then it's related to store value cards, charge cards or smart cards. Like the same thing is there. Like you're having a Paytm wallet with you, the same case AD can actually issue store value cards, charge cards, smart cards to Indian residents who are traveling abroad for their private or businesses purposes, can actually make payment using these wallets, using these charge cards or smart cards over there. So these are actually prepaid instruments which you can actually use. Okay, and further those can be utilized when you are moving abroad or you're traveling abroad over there. Okay, then it's related to redemption of unutilized balance on prepaid travel cards. Now when you actually it's a prepaid card, it would be like that I'm going abroad over there and I have loaded USD 10,000. I loaded USD 10,000 in my prepaid card over there, and when I came back, it was still having a balance of 3750 USD, which I never used. Over there. Now this unused or unutilized foreign exchange balance can actually be refunded in Indian currency after 10 days from the date of last transaction. Okay, now this can be done when you are after within 10 days. So the time period is 10 days, within 10 days from the last day of the transaction over there, you can actually get a refund for the same, and not more than that. Okay, then it is related to LRS, that is a liberalized remittance scheme 2004 over here. Let's look at the salient features for the same. So first of all, LRS is applicable for resident individuals, actually also including the minors over there, and it is not available to the corporates, partnership firms, HUF, trust, LLPs, etc., etc., not covered for them. This is only covering the Indian natural persons over only. Okay, and remittances can be consolidated in respect of family members subject to individual family members complying with the terms and conditions. It is to be consolidated over there. And further, for capital account transactions, clubbing is permitted only if the family members, co-owners, co-partners of the overseas bank account investment property is there. Okay, I told you related to capital account transaction, which is altering the position of the assets and liabilities over there. Now for that particular purpose, the clubbing of the transaction is permitted over there, that is permitted. Okay, then it's related to the permissible amount. I told you that the maximum amount which can be permitted under the LRS, it is 2,50,000 USDs per head over there. There is no restriction on the number of transactions. It's just related to the amount of transaction, that the total amount of the transactions per head per person is to be consolidated per financial year over here. And further, if you're going to exceed the amount, exceeding the amount mentioned there in LRS scheme over there, for that particular purpose, prior permission from the Reserve Bank of India is to be taken, except the cases I already explained you, like if you're emigrating, and further for medical expenses purposes, for abroad studies purposes, for that particular purpose, if it is required by the concerned company or authority over there, that can be taken in note, and further the excess remittance can be made accessing the amount mentioned there in the LRS over here. Okay, then it's related to purpose, permitted, not permitted over here. Now can be used for any permitted current account and capital account transaction, or any combination of the current account and capital account transactions over there, but cannot be used to give a gift to another resident individual by remitting funds to the latter's foreign currency accounts overseas. So what does it indicate? It indicates like person A and B are here, and further person B is going to move abroad, person A is going to move abroad. Person A has already remitted 2.5 lakh USDs amount over here in one financial year, and person A is now going to remit 2.5 lakh USDs, and further he's going to remit that particular amount in the account of person B. That is not permitted over here. That is not permitted over here. Okay, so that is to be taken note. And for the all other transactions which are not permissible under the FEMA are not allowed under the LRS also. Okay, so capital account transactions which are permitted under LRS, let's have a look at it. First of all, it's related to when you want to open a foreign currency account abroad with the bank over here, that is also capital account transaction, and that is actually under which the capital account transactions are permitted over there. And further, it's related to when you want to purchase a property abroad, for that particular purpose also, if you want to send the funds abroad, that is also allowed. If you want to make some investment abroad, and further setting up wholly owned subsidiary. Wholly owned subsidiary means that it's a subsidiary of some other company, but it's wholly owned by you, and you want to invest money over there, so that is actually allowed, and the amount up to like 2,50,000 USDs can actually be sent over there. And further, setting up wholly owned subsidiary or joint venture outside India for bona fide business, and the stipulated terms and conditions are there which are to be taken care of. You can actually remit the amount under the LRS over there. If you're going to extend the loans, including loans in Indian rupee to NRIs who are relatives as defined in the Companies Act 2013, that is actually also allowed. Okay, like as a loan, if you want to remit money to someone else, that is allowed over there. Okay, so that's allowed over there. Then it's related to gift or donation. Now resident individual may remit up to 2,50,000 USD in one financial year as a gift to person residing outside India. Okay, so if the person is residing outside India, that person is NRI over here, and you want to remit the money to that particular purpose for as a gift purposes, you can actually do so. And further, it could be the case that you want to make a donation to some organization outside India, that is also allowed over there. And I already told you that for medical treatment purposes abroad, you can also remit the money amounting to like 50,000. And further, if further expenses are to be made up over there for that particular purpose, if it is required by the concerned institute, medical institute over there, for that can also be allowed with the general permission basis over there. Okay, and then it's related to person falling sick after proceeding abroad may also be releasing 2,50,000 for his medical treatment outside India over there. In addition, an amount of 2,50,000 per year financial year is allowed for a person accompanying as attendant to be patient to a patient going abroad. Like person A is a sick person, he's going to abroad for medical treatment purposes. Person B is going to accompany as a caretaker. Now 2,50,000 can be allowed to this person, and the 2.5 lakh USD can be allowed to person B also. Okay, so that is also allowed for this particular purpose. Now it's related to facilities available to students pursuing their studies abroad over there. I already told you for studies abroad purposes, they can actually make a remittance up to 2,50,000 USDs per financial year. And for the, if there is if the institute or the university is actually insisting the estimate is going beyond 2,50,000 USDs, that can also be allowed. That can also be allowed over there. Now, what is prohibited under the LRS over there? Banks actually cannot or should not extend any kind of credit facilities to facilitate the capital account remittances over there. Like person A over here wants to buy a property outside India. For that particular purpose, it is allowed that under the LRS he can actually remit amount of 2.5 lakh USDs per financial year over here. For that particular purpose, if he wants to take the loan priorly for sending the money to outside India, in that particular case, that is not allowed, that is prohibited. Okay, remittances for any other purpose under Schedule 1 and Schedule 2 of FEMA are not permitted, so which are already prohibited, that is not allowed. Okay, and for the capital account remittances to countries which are identified, the FATF, that is the Financial Action Task Force, has identified the countries over there. For non-cooperative countries or territories, those are not permitted. For that particular purpose, the capital account transactions cannot be made to those countries over there. Okay, and for the remittance directly or indirectly to those individuals or entities identified as posing significant risk of committing the crimes and for the terrorism, and for the those that is actually not permitted over there. Okay, then it's related to operational aspects for the authorized persons. So as per the operational aspects for the authorized person, first of all, the authorized person is to obtain a declaration from the person who is going to transact in foreign exchange. Okay, that whatsoever the transaction is there, that will not involve and that is not designed in any of the manner that is going to be contravene or evasion of the provisions of the FEMA over there. And further, authorized person will obtain from the person such information or documents which are actually reasonably required so as to satisfy themselves related to transactions that will not be engaging or that will not be designed in such a way that is going to be contravening with the FEMA or any other rules over there. And also the authorized person is to maintain the record information documentation related to the transactions over there. They need to comply with the tax laws, and further they also require to ensure the know your customer guidelines have been followed and further have been complied with the anti-money laundering rules also. Okay, then it's related to the Indo-Nepal remittance scheme 2008 over there. Now Indo-Nepal remittance scheme was launched by the Reserve Bank of India in May 2008 as an option for cross-border remittances from India to Nepal over there, with the special focus on requirement of the migrant workers of Nepali origins who have been working in India over there. Okay, so it's a one-side remittance scheme which is over there, that from India you can remit to Nepal, but from Nepal you cannot remit back to India over there. So it's actually related to Indo-Nepal remittance scheme over there. Now what is the feature related? The target group is a migrant Nepalis working in India who make remittances to their families over there. Now the Nepali persons who are working over in India, they want to remit the money to their families over there in Nepal over there. So that particular purpose, the Indo-Nepal remittance scheme was launched in 2008. Okay, so the system was launched with only one-way remittances from India to Nepal, as I have earlier told you, and the ceiling of rupees 2 lakh is fixed per remittance. So as per remittance, the amount can be remitted up to rupees 2 lakh only, and banks may accept cash from the walking customers or non-customers, and the ceiling for receiving the cash is rupees 50,000 per remittance, with a maximum of 12 remittances in a year applies to such remittances over there when you're going to make a cash remittance over there, whether it's related to non-customers. So it is not required for the Nepalese migrant workers over here in India that they must be maintaining an account with the bank over there. They could be non-account holders with the bank, and further they can make remittance to the Nepal over there under this particular scheme over here. Okay, the remittances from India are in Indian rupee and the payment to the beneficiaries in Nepalese rupees over there. Okay, and banks can provide this facility to both the account holders as well as the non-account holders. And Nepalese migrant worker that actually not having the bank accounts at their end, particularly they are to produce their proof, like they are to produce their passport, PAN card, driving license, telephone bill, certificate of identification that is issued by the employer in India over there, with the details such as photograph, etc., and they can make the remittance in cash up to the ceiling amount of rupees 50,000 per transaction. And with a maximum of 12 remittances in a year. Okay, so that is a ceiling related to per transaction for cash purposes, and overall limit is rupees 2 lakh per transaction. And that is actually related to what? That is actually related to when you're going to transfer the money from your account basis purposes. Okay, so the ceiling for that particular purpose is rupees 2 lakh. Okay, that is actually related to it. Then it's related to operations. The Nepal remittances are processed in different NEFT branches at the National Clearing Center, Mumbai, and channelized to Nepal over there. So this is actually taking place there in National Clearing Center, Mumbai, and then it is channelized to Nepal. The amount is to be debited in Indian rupee, and it will be credited in Nepalese rupee over there. So remittances are paid to the beneficiary in Nepal through the branches of the Nepal State Bank Limited and their approved agents over there. The banks originating remittances must complete the customer due diligence that the CDD is to be done, and further the extent guidelines of KYC, AML, anti-money laundering, and combating financial terrorism, those are to be fulfilled. And further, the cash remittances are accepted from non-customers only. If the person is a customer, in that particular case the cash remittance is not accepted. For that particular purpose, the account will be first of all credited, then the remittance will be made. The address and telephone mobile number of the sender as well as also of the beneficiary in Nepal is captured while sending the remittance therein. Okay, so that was all related to the foreign exchange remittance facilities for the individuals. I hope that you must have understood the concepts and you must have liked the video. So if you liked the video, kindly please do give this video a thumbs up, and don't forget to rate this video out of 10. And if you want to get the full courses, that is available through our website iibf.info, and right now we are having two offers going on. First of all, it is related to flat 82% off on all the listed courses. For that particular purpose, use the coupon code exams over here, and also right now you're getting a double validity. Under the cost of for 6 months of the course, you'll be getting twice the validity. That is, for 12 months of the validity, you'll be getting the course. So do enroll right now and start preparing for the same. So thank you so much, and see you again in the next video.